All right. I think we're going to get started. I think we have quite a few people on right now. So, welcome to the webinar this afternoon. We're going to talk about our private debt and our private debt lending opportunities here at Spartan. I'm Rob Moreno, the Vice President of Investments at Spartan. I'm going to be walking us through the intro to private debt opportunities tonight. If you have any questions, please jot them down, add them to the chat if you'd like, and I'll get to a Q&A session later. Or if you'd rather, you can email me directly. My email address is Robert, ROBERT, at Spartan-investors.com. Again, Robert at Spartan-investors.com or investors at Spartan-investors.com. Investors is plural. Again, welcome. So Spartan does both debt and equity investing. So for those of you who are looking for upside and participate in the self-storage cash flow and appreciation along the way, that's our equity deals, and that's a different webinar. Tonight, we're going to talk about how you can participate in Spartan's projects and the private debt opportunities where you can be the bank and actually collect consistent monthly cash flow, just like a lender would. So with that, I want to start with our disclaimers. We don't provide legal or investment advice. Do your own due diligence, and this is just a general overview of private debt and lending opportunities that we have here at Spartan. Tonight, we're talking about private debt offerings that are typically made under Regulation D 506C, which is just a fancy way of saying these are open to accredited investors only, with our minimums of $50,000, and generally our notes paid 9% interest with an estimated 9-month term, and those payments are made monthly. So why invest in private debt now? Well, rates are starting to fall. Right now may be a really good opportunity to lock in consistent monthly cash flow at 9%. I'm personally invested in private notes. It makes up a healthy portion of my alternative investment portfolio. I really enjoy the monthly cash flow that provides me and consistent monthly income that's predictable and is also a shorter term in nature. I get these monthly, these aren't long-term notes, and they're backed by self-storage. So when you're looking at what these are secured by, what are they backed by, what are they secured with, and there was self-storage with strong performance in high growth markets, which is very important to us. So we've been doing this since 2017, and some of our investors really want that cash flow, and it's really the most important thing to them. This 9% coupon is a really great way to diversify and provide consistent cash flow. Now we have our debt fund, and our debt fund really focuses on all of our projects as needed, but this opportunity is for those investors who want more specific self-storage properties where they're investing their note and money. So for example, if you wanted to buy and you wanted to lend a specific opportunity or a specific project, that's what this is versus a general debt fund, which kind of gives discretion to the operator on which investments they can invest in. So this opportunity allows you to say, hey, I want to lend to this property under these terms for this time period. That's the opportunity we're going to talk about tonight. But all of our private lending is backed by our self-storage assets. You'll get a promissory note, which is a promise to pay, that outlines the terms of the agreement that's specific to a certain project or investment. All of our opportunities are given to strong performing assets, whether they have really great value at their upside through expansion, or they may be even ground up. We even offer lending opportunities to properties that might be producing monthly income already and are just looking for a value add to bridge some debt. And like we always do, we invest in high growth markets where their population growth has strong income for those properties and also great rental rates in a specific project. So these are key markets throughout the United States that we've hand selected, and we're going to either buy or provide lending opportunities for self-storage. Now, what are some of the benefits of private debt investing? Me personally, I like the fact that it's predictable monthly payments. In an investor equity deal, there's always the risk that there may or may not be cash flow. But for private debt, you're higher up the capital stack, you're lower risk, and this provides predictable monthly payments. The other thing that I like is that it's a shorter timeline of repayment, meaning that there's only a 9-month note with a 9-month potential extension, so it's a shorter time frame. So for those of you really don't want to hold on to an investment for 5 or 6 years, or maybe even 7 years, this provides a shorter timeline for that repayment. Now, for those investors that are using self-directed IRAs or solo 401ks or set plans to invest, this is perfect because there's no UBTI or UDFI when you're a private lender. So really, self-directed retirement accounts, like maybe through IRA Club or Quest, etc., those are perfect for being a private lender because you're not subject to the taxes that you normally might be subject to using your IRA or your investment. Your self-directed IRA to invest in something like maybe it is in an equity deal that uses leverage, and then there might be subject to some taxation as well. So really, highly beneficial for those that want to use the retirement accounts. Now let's talk about some terms. This is based on a $50,000 investment, and you can see that in month one the payment is $375. And for the remaining, it's also $375. So this 9% per annum distribution, and it's paid out monthly. So if you were to invest in, let's say, April, let's say, and if you were made a private note investment in April, your first payment would be June 1st, and that's going to capture May's interest. So we pay our interest in arrears by 30 days, meaning that on June 1st, you're getting paid for the interest that you accrued on your money for the month of May. And then likewise, on July 1st, you're going to get paid for the interest that accrued in the month of June, and so on. Now, just like we call this our 999, it's a 9-month note with a 9-month extension at 9% interest, and it's paid out monthly. So by the end of a 9-month term, it's assuming that the note went 9 months and wasn't paid off. It wasn't paid off earlier, and the total interest earned would be about $3,375. Now you may be thinking, "Hey, I really don't want to go 9 months. I want to go longer than that." Well, what we usually do is when the note pays off, we usually give you a call and say, "Hey, we would like to offer you the first right of refusal for the next opportunity where you might be able to roll your note into a future note." But likewise, if you need the money back, no problem. We usually just pay you off and you can go on your way. So let's talk about paying off and let's talk about some of our track record that we've had in private debt. So first and foremost, we've borrowed almost $30 million in total over the history of Spartan since 2017. And performing private debt, and about 14 million of that has been fully repaid. And we have about 16 to 16.4 million currently performing. We've never missed a payment. We've never been late, and our investors have always had the opportunity to get paid off when they want to get paid off, and we've had 10 full cycle debt repayments. So when you think about the opportunities here, I'm not going to go through all of them tonight, but I handpicked about 7 where I can go about 1 or 2 here where you can see now where we borrowed some private debt and we had full repayment in 3.5 months, 6 months, 7 months, and a few others, 6 months and so on. But as you can see that there's different opportunities that we've had where we've bought a self-storage property. Maybe we expanded it, maybe had added some value to the property. And then when we ended up selling it or ended up getting a refinance done with a lender, and there are multiple different ways to be paid off from the note, and then we moved on to our next projects. Now, if you're familiar with Spartan, you can see we've had over 14 full realized investments. This is both on the debt and equity side, and We can go on about it a lot more, but I want to talk to you about private debt. So, what are the uses for private debt? So, a great example where we had a property in Fort Valley, Georgia, where we had to add 10,000 square feet. The lender, they gave us a loan to buy the property that existed. So, there's about 50,000 square feet that existed, but we wanted to add an extra 10,000 square feet, and they didn't provide the construction loan. We went out to our investors and said, hey, we would like to do a private debt note and we'd like to use the money to expand the property. So that's what we did. And then later on, when we were able to pay off some of those investors, or if they wanted to continue benefiting from the private debt, we rolled them into another project. Here's another great example of a project in Tyler, Texas, where we expanded the property by 55,000 square feet. Again, we had a purchase loan from the borrower from a local bank, and in this case, it was a credit union. And then we used the private debt to expand the property by 55,000 square feet. About 6 months later, we sold the property for about 12.4 million, and we paid off that private note. So, other uses of private debt, we use it for a litany of things. First of all, I'll say that we use private debt sometimes to buy properties, and it makes us more competitive. Our first private note, it came out of necessity where we used it to buy an RV park in Texas. And when we got to the closing table, the bank backed out like something like 3 days prior. We had to put, we had already put down 50% of the equity deposit on that deal. And when the bank backed out, we went to the investor and said, hey, we have an opportunity to where you can be a private lender, be secured by the property, get a promissory note and personal guarantee. And you can make great interest on the lending side. Uh, our investors were really excited about it. They lent us the money, and since then, we've been benefiting from the interest that went forward on a monthly basis. It was a mutual win. It benefited the investors, it benefited us, and it gave us the flexibility to not only have to close on the property, but also have a lender. When we got into the really busy buying season of 2020 and 2021, we had to be really competitive at the closing table. So not only did we have all of these different uses of private debt, but sometimes banks weren't quick enough to close. And we needed to go to our investors and get to a point of where we could go ask to help us close the property with this private debt and quickly refinance them out. That's just one example of how we use private debt. And as far as an exit strategy goes, there's a lot of different ways that an investor can get paid off. Typically, you go through a refinance, we sell the property, we capitalize on the property, or we recapitalize on the property, I should say, and do a different fund or whatever it may be. What you can see, you can see, we use it as rebranding, repainting, resurfacing, drywall, fix up properties, renovate offices, and so on. So, a little bit about the borrowers and the people that are signing on the loan. They're Ryan Gibson and his business partner, Scott Lewis, and our CEO. They have over $100 million of combined net worth and $3 million of liquidity. You also get a promissory note, which is tied up to the property, so you can get a promissory backed by the asset itself. A little bit about Spartan. We're a vertically integrated company with over 30,000 units, over 120 employees, and we've raised just over 250 million today. I think that number is closer to 300 million now, and we've been recognized by the Vet 100 and the Inc. 500 for the last 4 years in a row. Our private debt documents. What documents do you need to do the deal? Well, it's really just two, a promissory note and a subscription agreement. And what investors do is they'll sign the subscription agreement that assigns them to the deal. And then you also provide a signature on the promissory note. And the promissory note is a promise to pay under the terms and conditions of the loan. So this outlines how much interest you'll earn, the payments, any late fees or conditions of the terms of the loan that are relative to the project. So we provide both of these documents to you should you want to move forward. And you just simply reach out to us to discuss what opportunities we have available and what you're interested in. But if you wanted to move forward with the private debt, these are basically the two documents that you're going to get: a subscription agreement and promissory note that are signed both by Ryan and by Scott. Okay, let's talk about next steps. If you want to become a private lender with Spartan, we do have opportunities that come up from time to time, and there are a few available right now that we can discuss privately after the webinar. Also, if you've ever talked to Ted or Jack or myself, please reach out to us directly if you're interested in being a private lender, and we can walk you through what we have open as well as the steps to get this completed. Obviously, Ryan is our CIO and president. If you've reached out to him, please feel free to. But Ted, Jack, and I, we're there to take the load off Ryan so that we can scale. You can always email us at either investors at spartan-investors.com, your individual rep, or you can always reach me at robert@spartan-investors.com, and we can get your questions answered. But likewise, if you received an email from one of my teammates, please reach out to one of them to invest in private notes, and we'd be happy to get you connected too. So reach out to me if you have any questions on how to get a hold of them. All right, now it's time for our questions. And I have seen a couple questions come in. So let me open those up and get right into them. Okay, first one is on what fees does Spartan charge for collecting the debt? We don't charge anything. This is a promissory note. It doesn't have any fees at all. Second question, why not just use a bank? Good question. The blended rate is not only better for our project, but also for our equity investors. It also will provide more opportunities for the investors like you to benefit from something that's a part of our offerings, and it's a win-win for everybody. Will the loan be in first position? It'll be right behind the bank, but in front of the equity investment. So you're higher up that capital stack, but just behind the bank debt. Okay, a tax question and how you will be taxed. It's my understanding that if you invest outside of an IRA, the money earned is taxed at ordinary interest rates. Okay, appreciation. Can I use depreciation to offset gains? Depreciation, from my understanding, will not offset the gains, making your IRA a great choice as the investment vehicle. However, this is just friendly conversation, not tax advice, so please check with your CPA. What is the strategy to exit from the loan? Well, in the last 10 successful exits, we've had anything from refinancing with the lender, selling a property, or we simply replace the debt with a new note. We only have time for one more question. Okay, I'm going to address the redemption period. Is there a redemption period? No, there is not a redemption period. You'd have to see out the note for the full time indicated in the terms. And okay, with that, thank you for attending the webinar. If I wasn't able to get to one of your questions, please don't hesitate to reach out to myself or my team. Again, my email is robert@spartan-investors.com. Reach out to your reps at their email. You can always reach out to me if you need to be connected, or you can always reach our investor inbox at investors@spartan-investors.com. And thank you for joining us, and I look forward to hearing from you.